Here we have the week 15 members only trading strategy update. The stock that we are looking at this week is Applied Digital Corporation. Stock ticker is APLD. So this is the technical analysis section, part of this video, this trading strategy for this week. Please remember to also take a look at the fundamental analysis portion of this strategy. That will give us sort of the underlying reasoning behind why we think this stock will be moving higher. But in this short video, we will be looking at some of the chart factors, some of the technical factors that will be going into identifying some very specific price zones that we will be using to enter into this trade. So as we can see here, this is the weekly price chart. So this is a very long-term time frame here. And as we can see, the stock has been under a lot of pressure previously. Most of the momentum has been focused on the downside, but we are starting to see this newer upturn in prices. So overall, this is starting to look a bit more bullish. And then from a very short-term perspective, what we're really trying to buy into at this point is this movement, price movement lower here. So we're trying to get a bit of a better price. We are seeing this major rally here, but now we're also seeing this downturn. So we're trying to sort of capitalize on this downturn and start to enter into this position. Now, I do want to focus on the fact that there is a lot of negative momentum here that is currently sort of working against this type of trade at the moment. So there is a lot of downside price movement. And for this reason, I do think that there is a possibility here that this stock could continue moving lower. So for this reason, what we're going to do for this one is to just enter into very small position sizes. So with all of these videos, we never enter into a full position size straight off the bat. We look for opportunities to enter, and then we wait for the stock to sort of work against us, and then we add to the position and sort of dollar cost average, get a lower price on the trade. So that will be applying here, absolutely, because there is a lot of negative momentum here. It's possible that we're finding a bottom at this point, but there are a couple of concerning chart signals here. Overall, from a fundamental perspective, I do believe that this stock absolutely turns around. So the key here is to try to get this stock at the best possible price. I do think that this downturn is starting to create an opportunity. Even though I do want to point out that this old 670 level has been important and it has now broken to the downside. And then on top of that, there is all of this negative price movement here. The share price itself is also below the exponential moving averages on the weekly chart. So there are some negative chart signals here. But what I want to do here is to start to build the position. So we start to enter in. So for the first entry point, let's do a little Fibonacci analysis here quickly first. So as we can see here, this recent rally that has occurred, we've already retraced 50% of that. So what we're really trying to do here is to capitalize on the momentum, this longer term momentum that was created by this rally, but now we got a 50% pullback. So we're trying to capitalize on this price movement at a lower price. So currently, what I think that we can do here is to enter into the position with an initial entry point of right around $6.25. So this is either you can just simply buy whatever the price is at the Monday open, or we can wait until share prices possibly move a bit lower to around $6.25. So that's sort of a decision that each person has to make. If you do want to be a bit more conservative, get a bit of a better entry, you can wait for share prices to trade right around $6.20 or so, or you can simply just buy at the open. So the trade-off there is you either get a better price and wait for $6.25, or you risk not being in the trade at all. If you sort of wait for that level, or you just enter in at the market open, whatever the price is, and then if the market works against us, then we add to the position to reduce the average cost. So that's entry one, right around 625 or the market open. For entry two, what we're going to be looking at here is the 550 level. It's a 61.8% Fibonacci retracement, as well as an old price low from September 19. So we're going to say enter in number two, right around 555. So just on an approach of that 550 level. From there, I think that we would be looking at possibly a break below $5. Okay, so then from there, we're going to look at entry three at coming in right around $4.25. That would put us close to our stop loss level here, which is going to be $4.10. So we will sort of reassess this situation if we get to that point. We're not necessarily going to stop out of the trade. I mean, that really just gives us a potential area of protection. in case the share price does actually move that far in that direction. It's possible something else is going on at that point. So we would need to sort of reassess the situation at that point. It's possible that we would get right back in. We wouldn't actually, be concerned, possibly, depending on what exactly is going on and why the share price is moving lower at that point. But overall, these are the trade parameters right now. So what we're looking at here is a profit target of $11.20. So from that initial entry point, that would be a profit gain of roughly 75% based on the most recent closing prices. The entry point is either at the Monday open, or we can wait for something to retrace a little bit into $6.25. If the market works against us, we add to the position again at $5.55. And then if the market is still moving in the downside direction here, we would enter again the final third of the position at $4.25. If we're not seeing a bounce at that point, we're probably going to be getting out of the trade and reassessing the outlook. So here's the current market update for Applied Digital Corporation, stock ticker APLD.